Hey guys, Chris Knight here, Business Development Manager with Red Door Property Management, bringing you the April 2024 market report for the Indianapolis and surrounding suburbs. I'm joined here, everyone knows Mike Taylor, broker owner. Mike, how are you?
Good, Chris. How you doing?
I'm pretty good. I'm pretty good. Well, I know we kind of skimmed over some of these market reports before we're diving into the official recording, and let's not hide the fact that there is some scary information regarding average days on market. We're not going to hide from it. We are going to report it as the information flows. But it is what it is. So stay tuned. Pay attention to the market reports. Beat your average days on market. Reach out to us if you have any questions or concerns about your particular property that might be having an extended average days on market. Happy to help, even if you're a client of ours or not. Always happy to share our wisdom. But without further ado, Mike, you wanna jump into this?
Yeah, let's do it. Let's start with Indianapolis. Again, this is just Indianapolis. So we break these out into a bunch of sub areas. This is just Indianapolis itself. Okay. So honestly, we have a lot of good news to report in Indianapolis and in a lot of the other sub markets in terms of average rental price and number of active homes or inventory on the market. So we're seeing, as you can see, this blue line here, this dark blue line is 2023 heading in the right direction. We had a huge correction towards the end of the year. So seasonality, I think, combined with a correction from a little bit of the craziness that we saw last year. But it looks like we're maybe getting back to a state of normal in terms of active homes. This would be a pretty normal curve where we're going to see it peak in the summer and then probably take a little bit of a dip come the winter again. So this is good news in terms of average rents. So right now it's at $13.90. That's up 2.5% from last year and up 3% from last month. So everything heading in the right direction. Now you did mention it right off the bat, Chris. Average days on the market, that is a scary number, 72. It's been a wild ride. I will say, I know that this is a little bit of a nationwide trend. Show Mojo is one vendor who does lockbox showings, and they recently put out a report for Q2 of 2024, basically saying that same thing, that they're seeing average days on the market higher than the previous 2 years across the nation. So we'll put a note, or we'll put a link to that report, but it's pretty telling that this is not an Indy specific issue. And actually, I think it's going to get better, because as we look at the active homes, we're at 1873. I'm going to fast forward here just for a quick second on this next report, but this is a historical active homes over time. You can see that as we're getting into the busy season, inventory is actually going down. And so we should see, days on the market follow that. As inventory goes down, active days on the market should go down, because days on the market's a lagging indicator. So it's my prediction that, June, July, and August, we're going to see a big improvement in most of the markets for days on the market. So, but it's still a scary number. I will say, I think that's even more of a reason to be attentive to the market, to these market reports, so that you can react quicker. Be the first one to take that price reduction of whatever it is, $25, $50, allow pets, do something to get your home leased up quicker than everyone else, so that, you're not racing to the bottom with them. Get it leased up now. And then, next year you can reevaluate the price and potentially do an increase or whatever needs to be done. So,
No, absolutely.
sorry,
So I'm going to jump in. I've got to speak to that at least a little bit. Exactly. You've got to be attentive to the market reports. You've got to have, if you're not, you certainly have to have a property manager that is on top of these market reports, or you are going to be seeing the average days on market reaching 72, if not even worse. Now, one thing I will say, and a little bit of refreshing news as more of these reports come out about nationwide trends, is that Red Door is currently beating what we are seeing as the Indianapolis market average days on market. So that's great news. Why do we think that is? Well, it's a combination of things. It's being not only knowledgeable about the overall market, but it's also informing our owners every single week what activity levels are on the property itself, and then knowing what advice we can give them in order to reduce the average days on market, reduce the vacancy timeframes, whether it be, and I think you alluded to just before we started recording here, that allowing pets into a property is up roughly 12%, I think you mentioned, which of course, I mean, if we have a property that doesn't currently allow pets, that is one of the tools at our disposal. If we're 3 weeks in and market activity on the property is not seeing what we think is necessary in order to produce applications on the property, then that will absolutely be one of the suggestions that we have. Now, it's important not to mention that suggestion 2 months later or 3 months later. You've got to be attentive to what can make the changes in your vacancy rate for your property, and then have somebody suggest those things along the way. Sometimes they're not always comfortable to talk about along the way, but you have to have someone who's got the guts in order to have those conversations to do what's in your best interests.
Chris, that's an amazing point. You need to have someone, or if you're self-managing it, be honest with yourself, or have a property manager who's willing to have those frank conversations. Look at this on a consistent basis. We look at it on a weekly basis, and we want to see a certain amount of showings. If we don't see them, we're going to tell you. Like, if it's not happening, then we need to tell you, hey, we're not getting the activity that we need to produce an application. If you have a property manager who's just telling you everything is great, and then now you average days on the market at 72, not reacting to the market, they're only doing you a disservice. So yes, either be honest with yourself about the activity, react quickly, because if you're just sitting there, not reacting, not knowing, then you are going to be this 72 days on the market. And I think that's probably why we beat this average, Chris, is that we do have those uncomfortable conversations, and we tell our owners, hey, sorry, we had 0 showings this week. And so we need to try to do something to increase that activity. It's not always an awesome conversation, but it's what they pay us to do, is to monitor it, have those conversations, make suggestions to ultimately not have 72 days on the market.
That's it.
Cool. Well, I'll go over sales price real quick. 245. Again, I say this every time, but just an amazingly affordable price point. And look at that. It's up 5% from last year, up 1% from last month. And I mean, there's 1,000 of those homes that sold last month. So there's lots of inventory in that very affordable price point, which is, always a thing is affordable housing. I've really alluded to this, so I'm going to skip over this pretty quick, but active homes on the market over time in Indy trending down, which is great news going into the busy season. Days on the market still a little bit wobbly. My prediction is it's going to go down in June, July, and August.
It may be wobbly, but it is at least, a more stable line than we saw last year.
Yes, for sure. Chris, I'll let you take over on Fishers.
Yeah, let's do this. All right, so Fishers, the first thing I'm going to notate is all the positives, right, before I get to the obvious negative. Median rental price over time, that's a great hill to be climbing. If I'm going to climb a hill, that's the one I want to climb. Active homes in the market, you're going to see this kind of correlate and stay consistent with a lot of the market reports that we're doing this month. Active homes is down just slightly. In my opinion, that's going to speak to a lot of your seasonality. A lot of people like to start moving when it starts to warm up, right? So your active homes tends to tick down just slightly. Average rents going at $21.95. So those are ticking up slightly. And if you've watched any of our previous market reports, that always throws me for a little bit of a loop that we're going to now go down to average days on the market at 85. Puke, disgusting. But to see your average rents tick up by $45 month over month, while your average days on market is also ticking, it's always difficult for me to grasp how that's possible. I mean, if my average days on market for my personal investment properties is if my average days is ticking up, I'm reducing the rent. So I think that's why it always just seems so confusing to me. But your average days on market, stay in tune. I was a little skeptical of the Fishers market last month when we saw an average days on market at 78. Well, we're at 85. If you have a property in Fishers and you have one of those stellar interest rates at 2, 3, maybe even 4%, should you keep it? Absolutely. You should absolutely keep it. If I've got new money, am I looking at Fishers as my first market with an average sales price at 363? Probably not. There's going to be other areas here that I'm going to mention that I would personally be looking at putting my dollars first. But if I own one of those properties and I'm moving, I'm not letting go of the interest rate. It's a beautiful market to have a property already in. School systems are amazing. Don't pay any attention to the average days on market that you're seeing here, because you're going to hire Red Door Property Management, which is going to be able to beat that no problem. I mean, that's my Fishers market report. I like Fishers. I'm not putting my fresh dollars there, probably, at least not immediately, unless a stellar deal comes up.
It's not a cash flow play, that's for sure. Sorry, Chris, I didn't mean to interrupt you, but it's not a cash flow play. I mean, if you want to have a nice, safe market, hedge your bets, have great real estate that you know is going to appreciate, you're going to attract quality renters, Fishers is still a market, but it's not a cash flow play for new purchases.
Yeah, exactly. Now, one thing that I've kind of been mentioning over the last few market reports is, and this is where I do see some potential in Fishers, is short-term rental. Now, if you've got a short-term rental, Mike, can you, I know I'm kind of putting you on the spot. Can you allude to at all how successful any of our Fishers, number one, do we have any short-term rentals in Fishers? And have you found those to be at all successful? And if so, or if not even, what areas have we found some success in short-term rentals?
You know, it's so hard to just say, oh, this area is good or this area is bad with short-term rentals. I'm always shocked how different homes perform. I will say we recently brought one on in Fishers, and it has performed very, very well. Super, super pleased with the occupancy, the daily rates. I know the owner, I think, is very happy with the results there. So yes, Fishers is definitely an attractive market for short-term rentals for sure.
Good. So if you have a property there or you're putting some fresh dollars, you might consider, number one, check with your HOA to make sure it's allowed. But number two, you might consider the short-term rental play, which could be a lucrative option. So that's my wrap on Fishers.
Cool. You want to talk at all about these guys here?
Yeah, let's mention these active homes. I mean, we kind of already alluded to, and we're seeing that tick down. My reasoning would be seasonality. So I think that hits that. A lot of these lines are looking a little bit more stable than last year's until we get to the average days on market, which, again, if you missed the Indianapolis market report, if you're not watching this thing in its entirety, you need to check out the Indianapolis market report. And we'll try to link it in this one as well. But Mike did mention a report that this is nationwide. This is what they are experiencing, a significant uptick in days on market in all markets. So now Indianapolis, I think, plays just a little bit lower than what they're seeing nationwide, but nonetheless, they're ticking up all over. So again, I'm gonna mention it again. I'm gonna beat it like a dead horse. Stay tuned to your market reports so that you are doing better than your neighbor.
Yep, absolutely. All right, Chris, Noblesville.
Noblesville, finally. Okay, now I have a refreshing feeling coming over. I'm feeling happy again. It's like, I'm glad we go with Fishers first because I can at least end on a little bit happier note because I used to love Fishers. If you're staying tuned to these market reports, which I know everyone here is, I mean, we're seeing the comments come rolling in on all of these, which we super, super appreciate and always happy to provide any feedback, whether you're already a client of ours or not. Happy to do that anytime. But Noblesville, Fishers was a market I would tout all the time, and Noblesville has quickly slid right in there and stolen the glory. I love Noblesville, and I don't even need to read these as I've just continued to chatter on. You've already looked at the numbers. Active homes, 96. We're down 4 month over month. Average rents are ticking up. We even get a sneak peek into May. If you just go to the left there, the median rental price over time, we're going to get a sneak peek into May. And what's it continuing to do? It's going to tick up again next month. That's awesome. That's awesome. Average days on market. Do I need to say anything at all? I mean, 23 days on the market. It is down 68%. But if you were to double this by 100%, you're at 40. So I mean, even last month compared to these other markets, it was stellar. So 23 average days on the market is absolutely mind-blowing. Your average sales price, which again, this is shocking to me. 338 for your investor point of view, which is any home that's going to sell below the $500,000 investor price point that we've kind of indicated. At 338 being your average, which last month at 350, so it's down almost 3.5% month over month, which is mind-blowing. I can't explain it. Mike, thoughts on Noblesville?
No, I think Noblesville has been and remains fundamentally a good market. The sales price thing, I'm not sure about could just be a blip on the radar, something to keep an eye on. I don't think it's like tanking or anything like that. Noblesville's a strong market.
Yeah.
It's got good schools. It's just a solid market. So I'm not concerned about that at all.
If you have fresh dollars, this is a market you're going to be looking at. I talk to new investors. I talk to new investors almost daily. This is a market that they are looking at, and you should be too.
Yep, Noblesville's a good market. Let's take a look at just the over time, kind of the trend that we've seen over the last 3. Right, the inventory is going down, which is great news.
Yeah, it's consistent with what we're seeing already on the previous market reports. And then somehow the days on market, which is an absolute blip, I'm confident of it. I mean, you're seeing it's indicating 74 for March. We're gonna forget that that's even there, because I don't believe that it's 100% accurate. But April at 23. I mean, there's nothing else to say there. I mean, if I had ribbons and balloons to throw at the camera, I would do it.
Yeah, that 74 is definitely an outlier. Hopefully that trend continues. And I mean, if it's like, look at last year, I mean, it was 18 days in August. I mean, geez, Noblesville's solid, super solid.
Yeah.
All right, we're moving on to Westfield, my favorite market. Again, I own several homes here. Love Westfield. And it continues to just outproduce everything. Man, I love Westfield. So looks like year over year, we're up 2%. Month over month, we're up 2%. Look at this sneak peek into May. It just continues to go up and up and up. Look at this. Average rent is $24.50. Gosh, if we were talking about this 2 years ago, I think we pulled it up a couple videos ago. It was like $1,600 or something crazy like that. So this is just like skyrocketed. There's so much more room to go in Fishers. So much building going on out there. So much activity. So many. Every time I open the paper, there's a new something being announced in Westfield. So gosh, just super optimistic about this one. 74 homes on the market. How does that, again, that trend is going down. I mean, we started at 129. The scary number here is the average days on the market. That's very similar to Indy. But if we look ahead, that I believe is going to get better over time. I mean, that 73 days is more indicating of back in the January and February, when look at this increase in supply, and that has slowly gone down. And so what we should see those days on the market also go down as inventory goes down. So 73 is scary right now, but again, my prediction is June, July, and August, we're going to start to see that go down very, very quickly. So that it doesn't scare me. Plus the 2450 is such a great number. I mean, I'm super optimistic about Westfield.
Yeah. Okay. All right. Couple things I have to comment. Number one, I'm going to ask you a question that I know that anyone watching this video is absolutely wondering, and that is, how often do you open the paper? So do you get a paper dropped off every day? Or because you did say, I mean, you know, that's a common thing to say. Maybe you're just saying that because all the news, but do you open a paper every day?
You know, it's funny. I was talking to my father-in-law the other day. Do you remember when they used to have a morning paper and then an afternoon paper? Do you remember that?
No. What do you mean? Does this youth look like that's something I would remember?
I was wondering if you could even have any clue of that. Yeah, they used to have an afternoon paper. Isn't that wild?
That is mind-blowing. Yeah. Wow. Wow. How much could the news change? What are they reporting on? Things that happened that morning? What kind of printing press is that? We're getting off target here. Is that,
we're getting off track.
What are they stomping those printing presses? Right, that's how that was. Oh, okay. It seems like a tremendous amount of work, but all right. Okay.
Anyway.
And then now back to what we're talking about here. Your average days on market. Yes, 73 is scary, but you know what's not scary is just below that, where you see that's down 40% month over month. Because I know, Mike, that I was starting to turn you into a little bit of a pessimist about Westfield, just like I was about Fishers. I feel like a scorned lover with Fishers, and I think you were closely there too with Westfield. I mean, those average days on market, although everything else appears to be pretty positive with Westfield, your average rents continue to tick up. Your sneak peek into May, but it's just hard to beat the cost of having an extended vacancy, which 73, in my opinion, is the very definition of an extended vacancy. So
no, it absolutely is. It absolutely is. But all the more reason to stay tuned to these market reports. I mean, if you need to cut your rent by $50 or $100 this year to get through that, so you don't have that, average days on the market. That's what I would do. That's what I do. I'm ahead of the market instead of behind it. And that's all the reasons that we do these market reports, is to educate our owners and potential owners of what is going on in the market. We just kind of have these conversations, whether they're comfortable or not comfortable. I mean, that's not an awesome number to report, 73, right? That stinks. But if you're smart about it, your home doesn't need to be at 73. That can be the average, but you can be above average. And
Exactly.
that's why we're doing these videos, is to educate you to do what you need to do with pets, with your price on the rent, but fill that vacancy. It will be so much better for you to take that price reduction, allow maybe dogs if you don't allow them, get it in there, get the cash flow coming in. And then in a market like Westfield, not only you're getting the cash flow, but you're getting the appreciation. Look at the average sales price. I mean, look at that, 2.5% over last year, up somehow 8.5% from last month. So, I mean, there's a huge appreciation play in Westfield and a lot of these markets that we do talk about, because they are so solid, such good fundamentals, such good schools. Just don't forget about the appreciation play that you're getting when owning real estate too.
Good point. Good point. And the last thing I'm going to mention before we go on to the next market report is, if you're watching this and you're like, my vacancy is super extending. It's over 73, or if it's over 50, and you're wondering what else you can do. If you're looking for another opinion, again, client of ours or not, reach out, post a comment. I will reach out with private message. I'll get the property address. I'll review what your current marketing looks like. I'll be happy to provide you any suggestions that I feel you might be able to do in order to potentially reduce your vacancy by that much more. I'm always happy to provide that insight. Reach out, send us a message, reach out, private message, post a comment, whatever works best for you. I'm happy to do that for anyone in any property.
Awesome. We really pretty much have talked about this slide, but inventory, like, look at that, just cut in almost half since the beginning of the year, which is amazing, and a wild ride on days on the market. Let you handle Greenwood, Chris.
Yeah, I mean, I like Greenwood. If you've watched all these market reports, again, I know that you have. I'm watching our viewership numbers just continue to tick up, which is super sweet. Greenwood is a market, if I were to compare it to any, I would compare it to Noblesville. That could be my own personal attraction to it, but Greenwood, I love it. It's an awesome expanding market, good school systems, lower entry price points, and your median rental price. I mean, we're going to look at our sneak peek into May. I love that little graph because it does give us that sneak peek into next month's market reports. We're going to see our average rents continue to tick up, which is freaking awesome. Now I'm going to jump right into the middle number there for average rents, because our active homes is continuing to correlate with our previous market reports and tick down. Average rents, 1745, which is up almost 10% month over month. That's awesome. That's awesome. What's not awesome with this particular market report, which is no surprise to anyone, of course, is your average days on market looking at 94. I'm going to consider this a blip, although that's, I mean, of course, we're seeing huge numbers for our average days on market and all these market reports. 94 seems really high to me, considering we were looking at 42 last month. If I'm going to blame anyone, I'm going to blame uneducated, uninformed landlords and property managers for this ever getting to a 94 in the Greenwood area, because I know for an absolute fact our properties in the Greenwood area go much faster than that. So if you're at 94, you're doing one or many things very wrong. So I'm not worried about it too much. Last month's, I'm still excited about at 42. Average sales price. Again, you know what's shocking? You know, I just compared this, and it was before I even looked over here at the average sales price. I just compared it to the Noblesville market, and it is now even the average sales price. It's ticking down almost 3%. Not worried about it. Last month, we were at 323 as an average investor point of view, which is any homes that are selling under the $500,000 price point. But we're down almost 3% month over month. I'm not worried about it at all. In fact, I'm probably excited about it. The same way I'm going to get excited about a stock market downturn. That doesn't scare me. That's the time I jump in. If I'm looking at down 3% month over month, I'm jumping into that market. All right. Because I'm going to ride the wave right back up. Number of homes sold at 105. No surprises. It's a growing market. A lot of new construction. Last month, we were looking at 90. Mike, any thoughts on Greenwood?
No, again, Greenwood is another good, strong, fundamental market, which is why we talk about these markets, right? Because we might see a 2% or 3% decrease in price this month, but we're not property managers for a month or a year. That's not the time horizon that we suggest that you look at. If you are an investor, you need to have a much longer time horizon, 3, 5, 10, 15 years down the road. And so what's your investment going to look like in 5 to 10 years? And so, we report these numbers on a monthly basis because it is super important to stay on top of the market, especially if you have a vacancy. But it's also important to kind of zoom out and say, okay, well, do I want to invest in this market long-term, right? 3, 5, 10 years down the road. And so to me, Greenwood is a super strong fundamental market that I want to own a home 10 years from now.
Yeah, exactly. Yeah, I feel the exact same way. I'm good here.
Cool. All right. We do have this graph on Greenwood again, kind of the same stories before, like you mentioned. The inventory is going down. Days on the market, wild ride. We've covered that probably too many times.
Exactly.
Okay. Anderson,
I'm taking it. You can't have it. Yes, let's go. Anderson, another market that I am pretty excited about. It's still a lower end market, a C type market, which is clearly indicated by just your average rents maintained month over month at $850. Even look at our sneak peek into May, back over to the median rental price over time, and guess what? The average rent price is going to be next month, $850. I mean, so consistency is good. Active homes in the Anderson area. This is the one market we're seeing an uptick. It's only up 3, but it is an uptick, and it kind of breaks the cycle we were on with active homes continuing to tick down. Average rents mentioned at $850. Now, I'm sure everyone's already looking at it because we've harped so much on average days on market and why it's so important to stay in tune to all these market reports or have someone in your team that certainly is. Average days on market at 22. Is this a blip? I mean, I don't know. We'll see. We'll see where we are next month. Again, if you double this, you're only at 44, which in this market is still seller. So yep. I'm okay with this even being a blip, but I'm still going to throw the confetti, throw the balloons at average days on market at 22. And then average sales price at 168, which is still up 5%. But my goodness, for an entry point into a market, if you're a new investor and you don't have all the funds that some of these big dog investors might have, this is a perfect market for you. And I think that the appreciation play in Anderson is huge. I read a lot about Lebanon. The only other market that I would potentially compare Anderson to, which is not probably going to have this exact same growth that I anticipate Lebanon to have, but Anderson, I do anticipate a lot of growth to happen in Anderson over the next few years.
100% agree. Yeah, I think just touch on Lebanon real quick because I do think that is an up and coming market. I think it's going to be a little higher end Lebanon, but it's definitely an emerging market as well. I think Anderson is also a hugely emerging market. I mean, it's just based on the affordability play. I mean, Anderson is what, 20 minutes from Fisher, something like that?
Exactly.
I mean, and the average rent in Fisher's was what, 2,000?
Solid point.
Yeah. And so, I mean, you want to talk about affordability. Gosh, for $1,000 a month, I'm driving 20 minutes all day, every day. And so, I mean, I think that's why you're seeing the days on the market. And from an investor point of view, gosh, like you said, 168 as an entry point. I got to tell you, I get all these like emails for homes for sale because we're active investors as well. And I almost pulled the trigger. I just didn't have time to go look at it. But there was a home that came up in Anderson for $66,000. I mean, who in this day and age has heard of a house for $66,000? And it wasn't
Not
like
since 2008.
Exactly. So anyway, I'm just saying the affordability play is there. I totally agree with you. This is, I think there's a lot of upside potential here. I mean, $850 is nothing these days. I mean, under $1,000 for rent, you can't find that anywhere. And so I don't know. I see a lot of potential in Anderson.
Which is probably why you're seeing such an average days on market at such a great number because, I mean, everyone who isn't talking about inflation these days, who isn't talking about the crunch that a lot of American families are feeling these days. Average rents at $850 become much more attractive to people that were once able to pay $1,200, $1,300 a month in rent. So they're going to be looking for markets where they can stretch their dollars a little bit more. Now,
Absolutely.
one last thing I want to say about Lebanon. I just wasn't sure if you had heard this fact, and I don't want to offend Anderson here by taking up Anderson's market report, but Lebanon looking at adding 6,000 jobs over the next year. 6,000 jobs over the next year in Lebanon alone.
Yeah.
So anyway, just had to throw that out there.
I'm pretty sure I've mentioned it to you and I think on this podcast before, but there's a huge master plan community, a golf community going in from Henke, the developer he did Bridgewater Club. He does all these high-end golf course communities. Well, he's putting one in Lebanon. And so that's like over the next 10 years, that's going to add, I don't know how many homes, but thousands and thousands of homes to that area. In addition, it's going to kind of bring that whole area up in terms of upscale. So I think Lebanon right now is also a great area to invest in. There's not a ton on the market, so that's why we've chosen not to put it on this market report. But it would be, I think we do 10 of these. It would be for me like 11 because I think that there's a ton of potential there. Again, a little higher end. You're not going to see 168 as your average sales price, but probably the same or maybe even more appreciation play in Lebanon versus Anderson.
Yeah, we may have to further that discussion and start adding it in here, even if it's numbers that we need to kind of just gloss over so that we can take credit when the Lebanon market does.
Let's do it.
We are going to be like, I told you. Go back and look at our previous videos. I told you that was going to happen. So
we should just record ourselves saying that about all properties or all areas, and then we'll be like, I told you.
Solid point. All right. Video editor, I need you to go back and erase that last part, though. All right, let's move on. We love Anderson.
All right. Let's move on to Anderson. Let's move on to Avon, which if you're not from the area, Avon is a suburb on the west side of Indianapolis. It is, again, one of these solid markets, great schools, higher end jobs, just a solid kind of community. And you're going to get good quality renters over here. So this is why we highlight this one. So kind of same trend as before. We're starting to see increase in rent. If you look at this preview for May, look at that. Boom, a big increase we're going to see in May. April we were up 4% from last month, up just a teeny bit from last year. And it looks like the trend is continuing to be better year over year. Average rent there is $2,000, and bang, look at that. Average days on the market, 15. I think that's the lowest of what we've seen so far. Yeah. So that is amazing. And look at that. There's only 39 homes on the market, which I think is down slightly from last month, if I recall. So inventory is going down. Prices are going up. I mean, that's pretty good. Average sales price, still pretty affordable, $327, up 13% from last year, down almost 4% from last month. I'm not super concerned about that. Again, the fundamentals are super, super strong in Avon. Lots of good stuff going on there. 47 homes sold in that under $500,000 price point. So there's still a good amount to choose from an investor's point of view. So again, this is just a good solid market. And any thoughts on Avon, Chris?
I mean, Avon is just another one of those markets. It's in my mind. Again, I like to kind of create a visual picture of what's happening in this crazy thing sometimes. And I see Avon as like a baby Fishers. Like it wants to grow up and be just like its sister Fishers on the other side of town. So that's kind of what I envision this to be. So I mean, certainly a few years ago, well, I mean, if I'm being honest, a few months ago, I was touting Fishers like crazy, love Fishers, and I do love Fishers. So, you know what? Fishers who? Avon is where I'm putting my money. I'm jumping into Avon. I'm going to ride Fishers all the way. So Avon's a great market, great school systems. I mean, it's a solid, safe market to be putting money into, without a doubt. The leadership over there, the government, local government, is doing a great job at ensuring that there's continued growth. Appreciation down 3% year or month over month. Who cares? You're up 13% year over year. Appreciation play. Put your home on the market. Rent it in 15 days. I like Avon.
I do too. This is another area where it's like, man, if you got one of those interest rates at 2, 3, 4%, you're crazy to sell your house and give that up. Make it a rental, make it a cash cow. If you've got a 4% interest rate, you're going to be positive on the cash flow. So don't give that up. Turn that home into a rental.
Yeah.
Do yourself a favor. Okay. Talk about little brothers. I feel like Brownsburg is Avon's little brother, right? I mean, so also on the west side, a little bit smaller of a market, a little bit more niche of a market. Kind of feel like if you're from Brownsburg, you want to be from Brownsburg. It's kind of one of those markets where I think people stay a lot, but they have a lot of pride, and for good reason. It's a good market. It's a good, strong market. Schools are good. Community is good. A little bit down here in this in the May preview, but the good news is we're up 11% year over year, pretty steady, same exact price from last month. So 2,045 is your average rent. Again, not a huge market, 25 homes on the market, but as with Avon, average days on the market is very good. Avon was 15, 36. Honestly, normally would be pretty average, but as we've seen throughout the other market reports, that's amazing, right? 36 is unfortunately an amazing number this month.
Yeah, no, it absolutely is. And this is a small market, so numbers can sometimes be skewed in some of these smaller markets. And I just want to mention, if you look at the average days on market in this, it's up 227% from the previous year. So that means last year your house was on the market for like 3 days.
Yeah, right.
No, I'm being funny, but I mean the average days on market is awesome. I mean it's up 71% from the prior month, which puts it right at Avon's numbers. Just a little bit higher, but I mean it's certainly close to it. Love 36 days on the market. I absolutely agree. This is a little brother to the Avon market. And talk about a safe place to put your money for a couple reasons. Number one, let me mention your average sales price at $368. If you bought a house last month, congratulations, you're up just over 8.5% on your money. You know how to properly invest. Well done. But aside from that is the parks over there, right? Eagle Creek Park, which is stunning, right? I mean, so talk about the government having an interest in maintaining a certain area. I mean, it's a safe place to put your money in to have almost absolute certainty that you're going to have appreciation play, even under a more unstable market, in my opinion.
Yeah. You know what's kind of curious to me, Chris? I think I just noticed it, but I would not have guessed that the average sales price in Brownsburg would be more than Avon. Look at this. In Avon, it is $327, and Brownsburg is $368. Isn't that curious? I never would have guessed that.
That is interesting, right? And its relationship to the park, though, Brownsburg's considerably closer, isn't it?
I don't think. Well, yeah, I guess you're right. You're right.
I think so. It's been a while since I've looked at the actual map, and when I'm driving, Google Maps doesn't really show me the whole area.
No, you're right. It is closer to it, but I don't know if it's. Sometimes those houses in Brownsburg tend to have maybe a little bit more land. When I think about Brownsburg, I think some houses with acreage and things like that, whereas Avon tends to have a little bit more of the traditional neighborhoods, which might be why that price point is different. But again, like you said, in the smaller markets, sometimes, with only 25 active homes and only 40 selling, sometimes those numbers can be skewed. But anyway, just thought I was curious.
Yeah, great market though, Brownsburg. Man, I may have to shift my attention from the east side of Indianapolis over to the west side because it's looking pretty sweet.
It is looking good. All right, Chris. Speaking of west side, man, this is our third west sider, Plainfield.
All right, Plainfield. Again, I mean, this is another market that I really like. I mean, I'm sounding repetitive here for a lot of these areas. I mean, the previous two are just, I mean, we're covering the entire stretch of the west side of Indianapolis. Those are all great school systems. Plainfield is right along with it. Now, it's a little bit farther from the Eagle Creek Park that I feel kind of provides a lot of shelter for your investment in as you move a little bit south into the Brownsburg and Avon areas. But Plainfield is still a solid, great up and coming market. You're looking at your sneak peek into May. We're going to see average rents tick down, which is really of no concern because our average rents month over month are up almost 9%. They're up 9% year over year, but up almost 9% month over month. So a slight downtick is really of no consequence. Your average days on market, Mike, remind me why we have this. I think it's because it's just such a small market. The average days on market don't truly represent. So if I'm going to throw out a guess, it's going to play pretty close to what we're seeing in the Avon and Brownsburg markets, which is somewhere probably around 30 days. And just for the effort of potentially being off a little bit, I will probably say around 40 days. Which if you're with Red Door, you're like, oh well, my Plainfield property didn't stay on the market that long. Oh, that long. That's right. That's because you're with Red Door. So we average days on the market. You're welcome. Average sales price. If you bought last year, you're jumping for joy. You're up 10% month over month. You're still up a little over 1% at 349 for your investor point of view, which I think was that slightly higher than what we were seeing. Yeah, I think it is, right? And then the Avon and Brownsburg market. I mean, pretty close. Those are all pretty close for your average sales price. So I'd probably be looking a little bit closer to the Eagle Creek area, but Plainfield is absolutely not a market. If I find a deal there, I'm going to pull the trigger.
Yep. Again, I mean, that's the reason we highlight these and talk about these is because they're all good markets, right? So we're not going to highlight a terrible market. So no, I think Plainfield is kind of grouped together with those West Side ones. Super good market, good fundamentals. I mentioned a little bit ago that Henke has that development going in Lebanon. He also has one going down in Plainfield too. So trying to bring that probably average price point up. Now that's probably more geared towards homeowners, but it just goes to show that there is interest in development, interest in higher end development over there. And to me, speaks to the good fundamentals of that community. I mean, you're not going to put a community in there with hundreds and hundreds of homes, maybe I don't even know how many, maybe thousands of homes, if you don't feel like the fundamentals are good in that community. So kind of another vote for Plainfield, if you will.
Yeah. All right. Now I'm starting to get a little curious. It sounds like you're shopping country clubs, Mike. Life is good. Looking for that next step. Is that right?
That's right. That's right.
Congratulations. Okay.
All right, let's move on to our last one, which is Whitestown, which we kind of alluded to Lebanon, and this is kind of on the corridor to Lebanon, right? Coming out of Zionsville, getting towards that I-65, and then heading up to Lebanon. So I see, I mean, there's already a ton of development out there in Whitestown with the Anson, and I don't know if you've been out there lately. Have your kids played soccer out there ever at the Zionsville?
Yeah, we go out there, I think about once a year at ZYSA.
Yeah. Don't they have a big Halloween one, Spooktacular or something like that?
Oh, they do. You know what? We haven't attended that in several years, but I do remember going over there for that. Yeah.
Yeah. Well, if you haven't been there in a couple of years, it's crazy how much new stuff is there. It's kind of like Westfield in a way. You feel like everything is new. There's so much construction. I mean, from residential to commercial to, I mean, everything is brand new there. So it kind of feels like that energy level and that like building level. And so I'm kind of shocked to see that the number of homes is only 29. But I think as time goes on, we'll see that this market grow because just of the development that's going on out there. So right now it's a smaller market, but I think there's definitely room to grow in there. But anyway, it had a huge jump in February this year over February of last year. So we haven't seen much since then. It's been pretty flat, but look, it's up 6% from last year, which is fantastic. Relatively flat, up 0.2% from last month. Average rent $22.29. And then I don't even know, should I talk about the days on the market or should we just end it early? I mean, 111, that is depressing.
I feel like somebody's cat fell asleep on the keyboard and just landed on one. All right. Because my goodness.
You know what, though? Honestly, you mentioned it, I think, in one of the previous ones that with these small markets, sometimes those numbers can be skewed. And I really have a feeling that's what it is. 111 is that is absolutely out of control. But if you look at the number of active homes, it's only 29. And we pull the average days on the market from the MyBoard data. And that's going to be even more limited than that. So I wouldn't put too much credence in that. I wouldn't be too worried about it. I'm not thinking that the average home in Whitestown is going to be on the market for 3+ months. That's just crazy. So I wouldn't put too much stock in that, to be honest with you.
Yeah, only a couple comments for Whitestown. You're absolutely right. It's an expanding market. It is a little bit of a ritzy area, right? I mean, so at least, again, that's the vision that I have in my head when I think about Whitestown. And so which makes me have the recommendation that if you have new money, and I might turn on this in a second, if you have new money, I'm probably not looking at Whitestown. But if I have a 2%, 3%, 4% interest rate and I'm moving from Whitestown, am I going to put my house on the market there? You're darn right I am, at a $2,200 average rent, which looks like it stays pretty consistent in our sneak peek into May. I have no problem. And not only that, your quality applicants, your school systems, right? I mean, which in return directly reflects your quality of applicants, your typically lower vacancy rate, although that average days on market is going to call me a liar. Your average sales price, though, at 362, I don't know. I might be even considering this. It's your average sales price at 362, which might be a little bit skewed that I think about it, Mike, with our home sales under the $500,000 price point, because I would imagine, and correct me if I'm wrong, Whitestown probably has a few that stretch over that $500,000 price. Yeah.
For sure.
Yeah. So it might be, I don't know, might be a little bit misleading there. But anyway, it's consistent with our previous market reports. At 362 is an average sales price. With an average rent at 2,200, I might be looking at putting fresh money there. I don't know. Well, and also the appreciation play is going to be huge here. It's going to be huge. So,
yep. And I think that honestly, all the growth and everything that they're doing in Lebanon, they're doing Lily's putting a project out there. I mean, there's like 3 really huge projects going there. So this is a really accessible. I mean, it's right off of 65. I mean, you're 15 minutes from Lebanon. And so I don't know. I kind of feel like over the course of time, the Lebanon, Indy / Whitestown, all the way up to Purdue, up in Lafayette, I think that's going to kind of merge into one big corridor. I think is what's going to happen. And this is kind of the South connector. So I think there's a lot of potential here, honestly.
You're absolutely right. I forgot about its proximity to Lebanon. That's awesome. That's stellar. Yeah, with the growth that's happening in Lebanon, I mean, all the CEOs will end up in Whitestown. Yeah,
the country club that I talked about.
Yeah, that's it. I mean, that's it for Whitestown.
Yeah. I think that's our last one. I think that's a wrap for this month, right?
You're right. That would be a wrap. I tried to wrap us early last month, and now I'm trying to wrap us late, as if we have more to come. That's a wrap. I know you enjoyed this episode because it was awesome and it was super educational, especially about your average days on market and how important it is to have a team around you that's educated and that's going to assist you in beating your competitors out there, because that's what this is. I mean, you are competing with the other properties that are currently on the market. Stay tuned for next month, where we're going to go over the May market reports. I can't wait to see what happens to the average days on market when we're in the market that we're in right now. I get really excited to get into the next one to see where the trend is really heading. If you have any questions, you got to throw them into our comments. Send us a private message. I'm happy to provide any insight into your current property, whether you're currently a client of Red Doors or not. I'm happy to provide any educational assistance I might be able to. Don't ever hesitate. I'm always happy to do that. Mike, thanks for joining us here today. We'll catch you next month. Any closing comments you want to add?
I don't think so, other than just stay tuned. I see if my predictions come true or not on those average days on the market. It's always so exciting coming out of spring and going into summer. I think the fundamentals are there, so stay tuned for next month to see if those days on the market go down like I'm predicting.
Perfect. All right, Red Door World. We'll catch you next month.
All right. See you guys.